Hello and welcome to Zeitgeist The Podcast, where we explore how words and semantics play a part in shaping global and local narratives. My name is Khalid and I'm joined by my co host, Rauf. Rauf, how are you?
Good, thank you very much.
Today, we'll be continuing on with the previous episode. The theme of this season is Paradox of Money, where we explore the different implications and ramifications of money in the context of global finance and in the context of local landscape of finance as well. Initially, we spoke about a few interesting things. Raouf talked about how the new resource may not be people or oil, but in fact, the new paradigm shift in technology, which is AI, the possible automation in various industries. Through this new paradigm shift in technology could lead to the consolidation of money and finance and investment. And so there's a lot of expectations in the area of technology. But at the same time, I also spoke about the possible inflation of expectations and how maybe money plays a part in the hyperinflation of expectations. And maybe we should manage expectations at this point in time. So I think continuing on with that, we will be talking about the involvement of debt, from national debt to personal household debt. I think that's something that's important to talk about as well. Ralph, maybe you can take it away.
Yes, thank you very much for that. This is part two of the Paradox of Money season, where, as Khalid mentioned, we talk about how narratives, how words and semantics affect global macro trends and narratives, and how things are changing, particularly in terms of economics and finance, because these are aspects that basically touch all of our lives, right? Now, to kick off, I think maybe we should basically shed a bit more light onto the idea of the paradox of money, or money as a paradox, right? We introduced this concept a little bit, I think, but we did not delve properly into it. So, Khalid, what do you mean by money as a paradox?
Well, I mean, there's a lot of things to be said about money as a paradox. I think one interesting tangent that we can go on is, and this is based on the great author and anthropologist David Graeber, who authored the book B.S. Jobs and Debt, the First 5,000 Years. He has a lot of very interesting insight into how we view the conceptions of money in relation to debt and in relation to interest and usury and things like this. But before all of that, I think we can talk about how I think the conception of money and debt is correlated when we talk about the heavy consolidation and investment into different sectors, in light of possible opportunities for growth. I think it is the fundamental idea. There is this fundamental idea that the conception of money usually gravitates towards how capitalists use those monies. I think capitalists like to find new opportunities in different sectors, different industries, and they would invest heavily in those industries in the hopes that there is a yield to be found in those industries. So whether it's in the form of profit or in the form of consolidation of power and influence. And we see this throughout history time and time again. But anyway, David Graeber talks about money, fundamentally the philosophical essence of money as a promise between us individuals within the context of the human species. He talks about how initially, from an anthropological standpoint, money didn't exist so much as it was a favor bank. People used to do favors for each other in a very kind of personal way. And society got along fine for a while, doing favors for each other. This is what he calls the personal credit system. But very quickly, what happened was that conflict arose. So, I would get angry at somebody because, I gave him something and he gave me something that I felt was not, on par with what the value was with what I gave him. Things like this, and this creates conflict. And when conflict like that happens, then we transitioned historically towards a method of quantifying things, and that is basically the initial conception of money based on what David Graeber talks about in his books. So we started to actually count. Oh, this chicken is worth 3 grains of rice and things like this. And very quickly, what happened from there on is that we transitioned from a personal kind of friendly credit system to this impersonal money system, a system that's quantifiable and a little bit less personal. This also led to the development of coinage. And it's interesting, David Graeber talks about the conception of the correlation between money and violence. So the first instances of coinage was developed by kings who needed to finance and immobilize armies. So that's something that's interesting as well. But either way, I think debt comes into play, and I think debt is something that kind of doubles almost as money in this day and age. That's something that's interesting and that happened along the lines. Yeah, Ralph, would you?
That is a promise made, right? I mean, like the paradox here basically it's a paradox between growth and debt, right? Like, for example, if we look at during the COVID times, right, the stimulus packages and the amount of money that was flooded into the system basically to keep people afloat, right, or to keep the system afloat, right, which inadvertently leads to these cycles of, because if money is coming into the system, somebody has to pay it back, right? Countries run on this debt cycle, and as you mentioned, promises. I think that's a key word. A key word here, right? Is promises, and I think you were mentioning previously to me that in this cycle of debt, some people are allowed or enabled to break the promise, right? And some people have to fulfill the promise.
Yes, exactly. I mean, David Graeber's got this very interesting idea around the idea of money. He says money is a promise, and inadvertently, the dynamic cycle that we should accept about money is that promises should be kept at some certain points in time, and promises should be broken at certain points in time, or there should be some kind of a pardon. So he talks about historically how, for example, the great lawmaker of Athens, Solon, very interesting character. He was a very respected lawmaker, and when he gained power, basically in Athens, one of the very first things that he did was he pardoned the debt of his specific city, the society that he was living in, which meant that a lot of people who were incurring large, massive amounts of debt were alleviated from that burden, and that, to some degree, empowered his society. David Graeber's argument is that this is sort of a natural consequence of what money should be. It should be the natural movement or the cycle of it. But we see in this day and age that there seems to be some kind of according to David Graeber's argument, there seems to be some kind of a double standard when it comes to the alleviation or pardoning of debt, and who gets to keep the promise, who has to keep the promise, and who doesn't keep the promise. For example, in the 2008 financial crisis, the big, large financial institutions were basically bailed out, which meant that you could say that the leadership of the day managed to pardon the mistakes of the financial institutions. Yet at the same time, the debts of the proletariat or the population, the normal people, they were not forgiven, so to speak. And so David Graeber talks about this as being kind of a fundamental problem in the financial landscape of the modern world. Yeah.
But what we're saying basically, I think, is that whoever gets pardoned from the promise, right? The promise still has to be fulfilled by somebody, right? And you can see this in a case study, right, with Sri Lanka, for example. Right, with I think they took a huge amount of debt, and there's something to be said there about supposed debt traps from China, right? Because China's growth is not like the U.S.'s growth. The U.S. grew militarily, if I'm not mistaken, right, through military bases and all. I don't think China has placed a single military base anywhere, right, outside of their country. I might be wrong, but as far as I know, they don't play that game, right? But what they do use is economic power, right? So in the name of development, like with the Belt and Road Initiative, developing certain portions of the world, I think around the global south area, right, to connect like the global south and all that. This requires money. Basically, any kind of development and progress requires money, and this leads on from at a national level, at the government level, right, at an institutional level, and at the personal level. If you want to make a big move in your life, buy a house, buy a car, send your kid to school, whatever it is, right, it requires money, right, and debt structures are, maybe you can argue, made too readily available, right, for people to avail, right, without even proper education on what this actually means for them. And it's the system is so interconnected, right, that it's not really only about the debt that you take, right? It is also about the debt that the country takes, which changes it's called inflation and all that, right? That changes the way that the economy functions, or the price of goods and services, blah blah blah. And you might not even see it immediate. People have this short-term mindset, right? It seems countries also have this short-term mindset. You know what I'm saying?
Well, yeah, on that note, I think debt is something that is seen as an instrument that is very significantly influences a lot of the movements of markets, and inadvertently a lot of the influence from a political standpoint, from an economic standpoint. I think some sources talk about how right now in Malaysia we have rising debt, just like everywhere else. I mean, we have national debt of. Some sources say that we have national debt that's forecasted to grow to about 33% between 2024 to 2029. To about 300 billion, or approximately about 300 billion, or 113 billion US dollars, excuse me. We have a current crisis in the rising rates of household debt as well, that going up to about 1.4 trillion. And some sources say that. But it's not something that's exclusive to our nation. Again, debt is something that's incurred throughout the world. I think America, the United States, currently sits at approximately over 30 trillion in debt, federal debt. I think China's got debt instruments that accrued over 300 billion approximately. So in that sense, we are pretty small scale in comparison to them. So it beckons this question: is that why are we currently in this situation where debt is constantly rising at the same time? And I mean, a lot of factors involved, of course, a lot of different aspects to explore there, and I think it's not nearly possible to explore all of the aspects at the same time in this podcast. But yeah, the question of debt arises when it comes to national debt. It's something that's that it's a bit of a tricky subject. I think a lot of experts, a lot of people who are versed in the topic of debt would agree that debt is a tricky thing. To some degree, debt is necessary. In many ways, that's what a lot of people would say. That's the ongoing narrative, right? But at the same time, or maybe we could say that debt is inevitable to a large degree, and so there is this idea of utilization of debt. But then on the flip side, the kind of the opposing narrative or the negative sentiment towards debt is that there is also the potential weaponization of debt. The earlier episode, I spoke about Yaqub Fugar, the historical banker who controlled kings and royalties by consolidation of assets, by overflooding them with debt that they couldn't necessarily pay back. And that's something that happens to this day on a national, on a political from a political standpoint or a political perspective. So there's this weaponization of debt on one side, but then kind of like the constructive utilization of debt on the other side. So it's a bit tricky, yeah.
What you mentioned, I'm going to tackle that one by one. Double entry, bookkeeping and accounting, basically, like as you mentioned, debt. Now, when we put debt on the books, basically, if we put debt on the books, it can come also in a sort of productive form. For example, if I produce goods and services, if a client or a customer pays me for goods and services in advance, this is a type of debt, right? It's on in double entry bookkeeping. It occurs on the liabilities side, I think, as goods or services owing, right? And it appears on the asset side, right, as cash in, right? So you get the cash, but you still owe something. It's again, it's a promise. It's back to this concept of a promise, right? Now, basically, the tricky part here, right, is that time difference. For example, from what I understand, e-commerce or product-driven businesses like maybe 99 Speedmart or these kinds of business. 99 Speedmart recently IPO'd, right? These kinds of inventory-driven businesses, from what I understand, I mean, these mini markets might have a different business model that utilizes shelf space, sells shelf space, but that's a separate thing. I'm talking about like pure inventory-driven businesses, right? They rely, from what I understand, they rely on those like 30-day credit terms and all that. So they take the inventory, right? And they don't have to pay the suppliers yet, right? They do business with, they sell those products at a margin, at a markup with a profit, right? And then 30 days later, or maybe even 60 or 90 days later, if they have really good credit terms, right? Then only they have to pay back, right? So in effect, they are utilizing the concept of a time difference in debt, what we call, and this is something that I think in terms of personal finance, the regular person does not really think like this. The regular person basically only knows, right? I take a loan for a house, right? I have 30 years. I pay my premiums, right? Maybe there's interest. Maybe there isn't interest if it's an Islamic facility, right? And that's basically all they know. But some at the consumer level, some people, right, have managed to understand debt as a productive force, as what we call leverage, basically, right? Leveraging off of these financial services. Another point that I wanted to make, you mentioned promises and who actually gets who pardoned from these promises and all that, right? I think the promise is made immediately in any kind of transactionary relationship, right? Like it just depends how long the time gap is, right? If I buy something from you immediately, right? Or we do a barter trade, like you give me one cow for like 50 chickens, right? I take the cow. That point when I take the cow, now it is on me. The promise, the expectation that you're going to get 50 chickens from me, whether it is now, whether it is in 1 hour's time, whether it's in 5 hours' time, whether it is tomorrow, you're going to get 50 chickens from me, right? If I don't fulfill that promise, so that's what you're talking about. People used to get angry because who's regulating it, right? And that's where the financial system comes in. Legal tender, money, right, with like the queen's face on it or whoever's face on it, basically, right? That is a promise, and it is a legal promise. It is a hard promise, meaning that if you do not fulfill this, you are legally, it's legal tender. You are legally obliged to now give me what I asked for. If I present you this legal tender, right? Otherwise, the law can come down on you, right? The government can come down on you. Law enforcement can come down. Enforcing the law. This is a law. It's legal tender, right? And you mentioned 2008, right? 2008 is basically a mega case study, right, in the collateralization of debt securities, right? CDOs, right? Collateralized debt obligations. Yeah, CDOs. So what they did was they actually packaged these CDOs and got the AAA ratings from Moody's. Blah 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 blah. It was a failure of the regulatory aspect. It was a failure of the is it called checking? Like background checking aspect, right? Checking on whether people could actually. It was an exuberance in the housing market. That's another issue. Exuberance, right? And as you mentioned, because I think you might be a little bit pessimistic about some things, right? Well, I'm pretty exuberant, right, about AI and semiconductors and all that. You reined it in a bit, right? Because it makes sense as a finance person or as a shrewd investor, you should be looking where exuberance is happening, right? And then being reining it in as Warren Buffett approaches it, right?
Yeah, well, I mean that's interesting. I think it's a good balance when it comes to these types of things. I think exuberance is something that exists in the markets. The investor and legendary tech thought leader Mark Andreessen talked about this, and I've spoken about this before in our previous episodes about how he says that opportunists should work in tandem, hand in hand with what he calls skeptics. Where skeptics will actually present problems, and after that, opportunists will try and fix those problems, and that's kind of a cyclical process that happens, and progress happens in industries through that, kind of mutual relationship between the two. The same way that I'm a little bit of a skeptic, and you're a little bit of an exuberant, positive,
Exuberant podcaster.
That's something that happens, but. There's a lot more things that can be said about that. Again, like Joy Ito, the author of Whiplash, he spoke about how it's difficult to sometimes understand what we should be hopeful about and what we should be fearful about. It's very difficult for us to predict what future paradigm shifts look like and such. And we keep having these. There are heuristics in our human condition that enable us to become very confident when we shouldn't be, and to be very fearful when we shouldn't be. That's kind of the issue there. At certain points in time throughout history, we were not able to see the potential of certain technologies, like for example the silver screen, motion pictures. People invented motion pictures or the first prototypes of motion pictures, and then they disregarded the invention as a something with no future. It took many years before people realized that, hey, there is a future in this, and then we have now the advent of Hollywood and big business and industry. People failed to realize that there was opportunity there. So a failure in skepticism. On the other hand, we have like the boom and bust cycles that we can see throughout in the 1920s, the Roaring Twenties, for example. When people were too rumbustious, were too positive about the stock market. That's when things started to go back. The dot-com bubble crisis was when there was a hyperinflation of positivity, kind of getting an over-injection of positivity in the markets. People thinking that there's too much opportunity where there is. Again, as I mentioned before, in the previous episode, there is this inflation of expectations that happen all the time, and sometimes expectations have to be managed. But again, it's very difficult to see that. And to tie it back with money, this is money that we're talking about. Essentially, it's the prospect of money, of making more money. Capitalists, opportunists, investors, speculators—they are always trying to look for where the money is. But the money can be very elusive. It's very difficult to find. And this is something that we struggle with again and again and again. Yeah.
Okay, so just to give some foundation here, now that we're getting into the nitty-gritty of talking about debt, talking about managing your debt, basically managing your money, right? And then growing your money as well. This is at the personal level, at the institutional level, and even at the national level, because they are actually all connected. That's the way I see it. And so let's take a page out of personal finance, out of the personal finance playbook. There's a concept called it's a three-part structure, right? This is just some actionable points for some of you who might be interested. It's called I think identifying the gap, growing the gap, and then repeat. Right. So first you identify the gap. This is either in your savings, in your income or your spending. It can only be one of these two parts because it's the input and the output, right, of finance into your personal life, basically, right? So how much are you making versus how much are you spending, right? And where's the gap, right? And then growing the gap. It's either by spending less or earning more, right? Either by earning more or spending less. And then repeat that process. So basically always be identifying where the gap is, and then growing that gap either by spending less or earning more. So earning more, for example, could include taking two jobs, right? Spending less could include paying off some of the debt so that your debt is more manageable, and so on and so forth. I think a large part of the problem, particularly with Malaysians, apparently some of the biggest debt issues can be found amongst people in the civil service. But recently, our Prime Minister announced apparently the largest ever pay hike for for civil servants, right? So I think there might be some relation there. But anyway, it seems that civil servants have been having a problem with managing the money, and this is it's not just them. A lot of people, they've been digging into their EPF, right? Their retirement funds.
Yeah,
I
and I think that I think that segues into financial education or financial literacy as well, right?
Yeah, and so I was just about to get into that, but just let me wrap up on that part because we're coming to the end of the episode. Digging into their EPF, their retirement funds, we are on the crux of a possible retirement crisis, but I'm not going to touch on that yet. But I do see that as related to the debt because it's either people didn't have money to spend and therefore they took debt, or they took money out of their EPF, their retirement savings, right? So onto that, you were talking about financial education and all that. Debt management, what basically what we had been covering just now had two parts, right? Debt management and also investment related, spotting trends. So like I said, growing the gap, either spending less or earning more, and you can earn more through investments and you can spend less through debt management. Clear, right? That's basically it. Right, so spotting the trends, and as Khalid mentioned, right, the trend might not actually be the trend. You get what I mean? As a shrewd investor, right? Okay, he mentioned some of the exuberant times. There was also something I think called the railway mania, right? Loads of people jumping on this new concept of the railway, right? And a lot of people, going bust and all that. I think, right? Oil was another sort of gold rush and all that, right? But sometimes the exuberance comes like the actual innovation comes from something that you didn't expect. What's an example of that? Just really a quick one that the actual.
So, for example, Joy Ito in his book, which he co-authored with Jeff Howe, called Whiplash, he talks about an unexpected invention, which is the telephone. People, I think even before Ben Graham, I think the inventor of the telephone, people had
Alexander Graham Bell.
Graham Bell, yeah. People had developed different prototypes of the telephone, but again, people didn't see, could not foresee the true applications of it in the future. And so they, let go of that preliminary idea for something else. This happens time and time again in this modern world. I mean, if you think about, for all of you entrepreneurs out there, think about an idea that you had, that you tried to conceptualize and develop, maybe even develop fully, and then realize, and then think to yourself, oh, okay, it's not something that has a future, and it's time for me to cut my losses and move on. Only to later find out that you were on the right track. You just didn't have the proper vision to foresee what that thing was in the future. So, yeah.
Yeah, so another trend that had a lot of exuberance basically pumped into it was NFTs. And where are NFTs now, right? So anyway, we've come to the end of our episode. And this season has basically been an introduction to some of the programs and initiatives that we have planned to implement on the ground related to debt management. We have a mission to lift Malaysians out of debt. And so do watch out for that. I think at some point you might find a link to some of our initiatives in the podcast episode description. So I'm Rauf, joined by my co-host Khalid. We're both from Palindrome Communications, and thank you very much for watching this episode of Zeitgeist.